COVID-19 has proved to be a catalyst for change, with interest in responsible investing reaching new highs. One of the bright lights was the positive momentum built around acknowledging the risks of climate change. To unpack the practice of responsible investing and discuss the results investors can expect from it, I'm joined by Kingsley Williams, who's the Chief Investment Officer at Satrix. Thanks so much for your time on SABC News this afternoon. What's the difference between ESG and sustainable investing? Just explain both of those to our viewers.
Yeah, thanks, Nzinga. Sustainable investing is probably the broader umbrella within which ESG specifically operates. But sustainable investing includes other approaches to investing from a sustainability perspective, such as active ownership or investment stewardship, which really speaks to constructively driving sustainability through proxy voting and company engagement. There's also investment terms or investment approaches that you might have heard, such as SRI or values-based investing. Sharia investing might fit into that sort of category. And then impact investing is really to try and drive some sort of positive societal benefit through the investing process. So ESG is one of the aspects within the sustainable investing umbrella, and it specifically refers to environmental, social, and governance metrics, which measure how well a company is managing those particular risks, some of which are current and ongoing, like governance, for example, whereas others are longer term in nature, like managing environmental risk.
Mm-hmm. So what's the demand for responsible investing in South Africa versus elsewhere?
Well, there's been a growing trend globally, and I really see this as part of a long-term, I dare to call it a mega trend, of investors being increasingly aware of issues beyond just what is reported in the financial statements. They want to know that what they're investing in is driving or being part of driving positive change in society more broadly. And investors are increasingly demanding this of asset managers and professional investors such as ourselves to make sure that these issues are being factored into the investment process. And to the extent that it assists with, mitigating absolute risk by managing these other dimensions outside of the financial statement, it can really be used to ultimately provide a safety net in the investment journey to some degree. Mm-hmm. And this is really why it's being driven locally. And another important point to mention is that it's also increasingly being driven by regulation. So both locally and internationally, we're seeing increasing regulation coming into the investing space to ensure that there's a sustainable approach to the way investments are done and that ESG principles are adopted in that process.
All right, so describe the regulation for us when it comes to ESG. What does the regulation look like?
So the regulation is quite broad. It's not very specific, but within the context of the Pension Funds Act and what's known as Regulation 28, there is a requirement for sustainability issues to be considered. And that can fit, obviously, within any one of the subsets that I mentioned earlier, whether that's adopting an active engagement or proxy voting approach to your investments, or taking a more active stance in potentially screening out some companies that don't meet your sustainable investment framework, or trying to drive a specific impact, such as rewarding companies which are doing good in specific areas of society. So it's quite broad, but it's really left up to the industry to decide what within that sustainable investing framework they specifically want to target and be part of.
So is ESG in the investor's best interest? Because it seems even mining companies are going or looking at that when they're looking to where they're working. And does social impact go hand in hand with financial gains or returns?
Yeah, there's a lot of debate on the second point around, whether there is a clear correlation and relationship between managing ESG factors or risks versus, financial returns and investment performance. I think one thing we can say for sure is that companies that manage these risks well are probably quite good at managing other risks in their business as part of their day-to-day business operations. And certainly, one thing we can say is that, the ESG factors really speak to the broader societal issues that are not going to be reflected when you just look at a financial statement. And these are the things which can loosely be termed a license to operate within a society. So making sure you're dealing with the social challenges that are facing your society, making sure that there's good governance in place. We've seen some governance scandals over the last few years, and there's no doubt that raising the bar from a governance perspective is ultimately in the long-term interests of investors. Mm-hmm. But the other part that it also talks to is this term of what we call externalities, and this touches on that point I was raising about aspects of a company which are perhaps not reflected in the financial statements, or the costs associated with the operations of that business which are not reflected in the costs of the financial reports. And looking at companies through a lens which sort of takes cognizance of these externalities or these other factors and other issues ultimately helps to have a better view on what the sustainability of these companies are long term.
So, Kingsley, what should one consider when they are looking for socially responsible investments?
Well, in the context of ESG, a lot of investors will have different degrees of risk or activism, dare I say, on how aggressively they want to adopt these principles within their portfolios. The solutions that Satrix has brought to the market in the form of the two ETFs that we launched last year take a very pragmatic approach with regards to ESG. So we recognize that investors are ultimately concerned about what the broad market is doing, whether that's without considering any ESG factors, but they also want to do something good with their investments as well. So our belief is that these portfolios sort of find a happy medium or compromise between those two often conflicting issues. So on the one hand, making sure that you adopt a positive approach from an ESG perspective, drive change, particularly in terms of reducing carbon emissions, which is excuse the pun, a hot topic globally. And but to do that in the context of making sure that you don't have a very different return experience to what you would have had you not adopted an ESG approach. So we think that it finds a very sort of sweet spot and balance between lots of different and often conflicting objectives for investors.
Thanks so much for your time on SABC News this afternoon. Kingsley Williams, Chief Investment Officer at Satrix, joining us there. Your other details are coming